This AI-powered SuperTrend indicator predicted this 11% Bitcoin price drop. If you had taken a short position here with a 2% risk per trade, you would have made over 20% profit. How crazy is that? Check out this continuation trend signal. With leverage of 5 to 1, it could have made you 15% profit. These are just a couple of examples of how effective this tool predicts future price moves. The indicator does not repaint. It is based on machine learning, which means it calculates data from the past and improves the quality of its signals. Make sure you watch the entire video because I will show you how to optimize this AI SuperTrend indicator for maximum accuracy so you can make consistent profits from any market. Traders, if you like the tutorials our team produces, please like and share them. Also, subscribe to Magic Indicator Strategies if you haven't already. Alright, so how do you install this AI SuperTrend indicator on the price chart? First, open any chart on TradingView and click on Indicators. Type Volume SuperTrend AI. The one you're looking for is this one by Ziaman. This is a brand new indicator released not long ago, so not many people know about it yet. Volume SuperTrend AI is an advanced technical indicator used to predict trends in price movements. It uses a combination of traditional SuperTrend calculation and AI techniques, particularly the K-nearest neighbors or KNN algorithm. By combining these approaches, the indicator aims to offer more precise predictions of price trends, offering bullish and bearish signals. The cool part about this indicator is that its signals do increase in accuracy over time. The more data is processed about a stock's price movement, the better this tool knows when is the most optimal time to buy or sell. Volume SuperTrend AI emphasizes the importance of trading volume in the trend direction by using volume-weighted moving averages, allowing it to respond more accurately to market dynamics. This tool considers not only price movement, but also trading volume, introducing an extra dimension to trend analysis. By integrating volume data, the indicator offers a more nuanced and comprehensive understanding of market trends. When trends are supported by high trading volumes, they tend to be more stable and reliable. In practice, a green line displayed beneath the price typically suggests an upward trend, reflecting a bullish market sentiment. Conversely, a red line positioned above the price signals a downward trend, indicative of bearish conditions. Here are some examples of continuation trend signals. A bullish or bearish trend starts with a green or red dot. This is an early signal of a momentum shift. Such signals typically have low accuracy. On the other hand, when the price makes a correction after an initial move and then continues advancing in the same direction, a trend continuation signal occurs. The accuracy of these alerts is much higher because the prevailing sentiment has already been detected. Another reason these signals have a higher success rate is because they don't appear in a ranging market where trading volume is low. In the indicator settings, you are presented with many customization options. To get a more balanced and smooth view of local patterns, you can increase the number of neighbors. If you want to make the algorithm more responsive to recent changes, the number should be decreased. Number of data points is another significant parameter to consider. Increasing historical data will provide a broader perspective, but it may dilute recent trends. Decreasing the number will focus the indicator more on recent behavior. The next setting is the length of the weighted moving average for price. Higher values create a smoother price line, influencing the KNN algorithm to be more stable but less sensitive to short-term price movements. Lower values enhance responsiveness in KNN predictions to recent price changes but may lead to more noise. You can experiment with these settings and find the ones that work best for a particular time frame or security. I myself like to set the SuperTrend factor lower. For example, instead of 3, I like to set the value to 2.5. You can also set a different moving average source. This will affect signal accuracy as well. Instead of VWMA, you can enable EMA for that purpose. If you're looking to further cancel fake signals during the ranging market, I know one powerful tool that can help you with that. Again, not many people know about this indicator. I'll reveal it in a second. Before I do that, if you're looking for the #1 cryptocurrency exchange with low fees and highly accurate trading bots, I highly recommend Pinex. This exchange offers 16 built-in trading bots that generate extremely high returns on investment. You can simply create a bot that buys and sells cryptocurrencies on autopilot without you having to do any extra work. I've been using this exchange for quite some time now, and the experience has been excellent. I'll leave a link in the description. Check it out. Let's go back to our secret indicator that cancels fake signals issued by AI SuperTrend. Open the Indicators menu and type Range Detector Indicator. It is this one by Fontira Misu. Once installed on the chart, open its settings and change the depth to 10. Head over to Style and uncheck Lines and Labels. This indicator colors candlesticks based on the market sentiment. When strong selling pressure is evident, candlesticks are red. When the market is mainly controlled by buyers, the candlesticks turn green. When the market enters a consolidation phase and the activity is low, the candles become orange. This is the time when you should not take any trades. If any signal given by the AI SuperTrend appears on an orange candle, it becomes invalid. Check out how many fake signals this indicator has eliminated. Even these early SuperTrend signals became more accurate. Now you can ensure that only high probability trades are taken. Let's look at an example of one of the many trading strategies you can try with these tools. After a downtrend, the market entered a consolidation phase. No signals are valid at this time. There are two scenarios that can happen after this phase: a trend continuation to the downside or a trend shift to bullish. For that, we must wait for either a green dot or a green triangle to appear above the candlestick. Once we have the signal, it's time to analyze price action. Remember, price action is the most important factor. You must take into account support and resistance before making trading decisions. It's not that difficult to identify these levels. In this example, we see that a strong supply level is around this price. So, we can set the profit target here, expecting the price to increase and bounce off this level. Let's see how this trade plays out. The indicator prediction was right. We could have made profit on this trade. Now let's learn how to take short positions with this strategy. Firstly, we must wait for the candle bars to turn red. That signals strong selling pressure. Next, we'll look for an indicator to generate a sell signal, just like it did right here. Finally, we'll analyze the price action. You don't need to be an expert to tell that there is a strong demand zone around this price. We expect the market to reverse once this zone is reached. Placing the take-profit target lower would be quite risky as the price might not reach it. That's all there is to it, traders. If you enjoyed today's episode, please leave a like on this video. Be sure to backtest and forward test this or any other trading strategy you learn on my channel before trading live. Thanks for watching. Till next time.